Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, October 27th, 2016. So this market's just really kind of weak right now, and even though it's weak, we're still range bound, and it may stay like this for until next Tuesday, until the elections are behind us. It seems like there's been more pressure to the downside than there is to the upside, because the only way that they've really been moving this market up has been on gap higher. So when the cash markets are closed. But nonetheless, every time we get down to support, we find buyers. So there's work that has to be done on both ends. Once we break out of this range, whether it be to the upside or to the downside, then things will clear up a little bit. But until then, it's really, really, it doesn't make a whole lot of sense for me to, sit there and say, okay, you want to be overly bullish or overly bearish. I just think there's too many moving obstacles that are in the very near future that can have it drifting, either way. So anyway, let's just look at some patterns. This is the bearish rising wedge. This is calling for a move to come someplace down into this level here. Is it going to come down here? I don't know. Maybe. We'll have to wait and see. I think that this 2076 level is going to be a magnet, and the main reason is the moving average, and we also have the weekly moving average that's hanging out at the 2069. So those are really, I would say, would be the two targets on the downside if they continue lower. But then we have the 38% retracement that's at the 2048. So the preferred count is A, B, and now we're making a wave C down. We haven't tested these highs. We've made a series of lower highs, so the trend is down, but it hasn't broke down. That's that's really the big thing. And anybody that's been sitting here waiting for the big trade has just been frustrated. But I think that it's been a lot easier for the shorts than it has been for the bears. I meant for the longs. So anyway, looking at the 15-minute chart, this was the support here. It's broke it. It keeps trying to get back in, and then it's getting sold off. And what's happening is we now pretty much know where the base is and what the bears need to get through. And that's going to be right around this. I think I have it on another chart, but right around this the 2131. If they break that, that's when there's going to be a reaction trade down to the 2124. But most likely, it's going to come down and test this 2115 or 14. Now the problem with another test there, we've already had 1, 2, and if we're going to go and hit it a third time, then there's a real good shot that it's not going to hold, and that's why I don't, I would be very, very careful, buying. But our momentum, we're a little bit below the midline, so there's still gas in the tank if the bears want to take it lower. We are coming off of bearish divergences, so that's why I've been kind of having a bias to the downside. And we don't have any bullish divergences yet. So again, we're here that we need to see some work to get through this support. If they do that, then the bears need to push it through to 2115 to really get momentum going down to this 2048 or somewhere in this level here. And if we start breaking this, that's when we start expecting this. So right now there's still some work to be done. If we look at a 15-minute chart, normally you'd be looking and saying, all right, yeah, we have some bullish divergences. You can see by the technicals moving up, but we're not making lower lows. So they're doing the right. It's having the right look down here, but we're not making lower lows, and that's what's negating this bullish divergence. But again, this is the really what we're looking at is the bears need to break through here, the 2131. If they do that, then we're coming down to the 2124, and more importantly, the 2114. We're getting pretty oversold here. Nothing major. Maybe the bulls try to gap it up again tomorrow. We'll really have to wait and see. But this is the problem with what's going on, is that they're starting to form another a descending triangle, and that's, you know, that you form enough of these, it you know, when it breaks, it's going to be pretty ugly to the downside. And this is what I mean by the descending triangle, where, you know, they keep testing the support down. It's close like that, but they keep testing the support, rallying it up, but they're making lower highs and just staying kind of equal with here, and that's your descending triangle. So anyway, the really what we're looking at is the bears need to, this is the range that we're in. The bears need to push a little bit lower to probably see a quick move down to the 21.23 or down to that 21.14. The bulls need to push it through this the 21.45 level, and that's when we'd start looking at the 21.54 or 62. But like I said, it's there's really, you know, I'm definitely have my bias to the downside, but I would just trade really lightly right now because everything could change quickly, and I'm not sure if there's going to be any monster moves heading into the elections. But if there was going to be a surprise, most likely it will be to the downside. So with that, enjoy the rest of your night, and I'll talk to you guys in the morning.